Greg, sir, how are you?
Hey, I'm doing good. How about yourself?
Doing very well. Well, let's see if our phones get along this time. I think they were fighting a little bit earlier, so forgive us, everyone who's coming on. If they do get into that fight again, let's see if it we can make this one work.
Sounds good.
Must be nice. You still have a lot of sun out there. It is completely dark, raining, and thunderstorm coming our way, so it's a little bit different from from where we are.
Yeah, we got a nice day here in Vancouver. Just got back from the Yukon where it's 24-hour daylight, so that was a novelty for sure.
Yeah, I've
Um,
never experienced that. That must be absolutely a very, very interesting thing. I'm sure for someone like yourself, you've been up there a couple times before, but
yeah,
that must be very interesting. 24 hours, just always.
yeah. I mean, the sun at the latitude we were at does set, but it's always twilight. You go a little bit further north, and the sun actually is low in the north, spins all the way around to the south, and then low in the north again. So it just does a big
Yeah,
circle around the horizon. It's pretty wild.
it's great. It's absolutely incredible how that can happen. But you know what? You're not there for full time. You're just there, just there for what, 4 days was it? 5 days?
Yeah, yeah, it was part of what was called the Yukon Mining Alliance. It's a group
Okay.
of exploration and mining companies that have kind of joined forces to collaborate and tell the story of the Yukon and exploration of the Yukon with the history and the current, modern mining that's going up there.
Oh,
And
very nice.
the government of the Yukon sponsors to have investors and analysts and interested parties come up and be able to meet the folks from the Yukon government and to get
Mhm.
out and actually get out on some of the sites and there's a investor presentation day as well that's in Dawson
Yeah,
City, the famous site of the Klondike Gold Rush.
very nice. I'm hearing from Chris, trusted sidekick, that you may need to lean in a little bit for the camera. It's only got a half your camera there. We've
Oh,
got a
really?
beautiful
Okay.
half side of your face.
Uh,
You're,
all
you're
right.
giving us the good.
How
You're
about,
giving us the good half.
how's that look? A little better?
Yeah, it's. I believe we've got your face coming in there.
Okay.
There we go. We've got your full face now.
That's better.
There we go. Thank you, Chris. Always looking out. Now, for yourself, Greg, I know we have met in person. We've had emails going back and forth, calls, and all of that. And I've been fascinated by one, the two companies that you're bringing to our group and that you're currently working on, but also just your knowledge of the industry and your knowledge of what it's been like over the last, I think you said 30 years of being in the exploration industry and mining space. It's been a pleasure getting to know you. For me, myself, I've been an avid cannabis investor for years now, 5 years. Anyone here who was in our group knows that. But mining has always been something that I've been interested in and never really, took that leap of faith and jumped into it. That changed about 4 months ago. Many of our members know Garibaldi Resources, GGI. A lot of our members are there, our
Yeah.
investors with them. But that really changed things. I started realizing, this is a very interesting sector to want to learn more about. So I started digging over the last couple of months, but you had brought up information that I hadn't heard before, and you said it in a way that was so understandable and really made me want to seek out more information. So I thought this would be a perfect time to bring you on a Facebook Live. First, I'd love to hear about your background, but then also talk about something that you were calling the cycle. But to begin with, could you let our viewers know a little bit about your background and what you've been doing over these last 30 years in the sector?
Sounds like a long time. Yeah, no, I started out my career with, well, coming out of university, I had a desire I got a degree in geology from Western Washington University, which is just south of Bellingham, or just south of Vancouver in Bellingham, Washington. And so a lot of mining focused people. Vancouver's kind of the global hub for exploration mining companies. I went up, started my career with a company called Placer Dome, who was bought out in 2005 by Barrick Gold, which is the world's largest gold company, and had a pretty great initial part of my career working for this big mining company in the exploration group. We were out learning, taking that degree and applying it in a real sense, because a lot of what you learn in university is how to identify a mineral and what kind of rock is this, but it's really the hands-on practice of getting out and finding out, well, what does it take to actually find a ore body, and what are these companies looking for, and how do we do this? And so I was really fortunate to work with some really great people early on, and spent the first part of my career working in Alaska. I was part of a couple of major discoveries up there, the Donlin Creek project, which is started out pretty similar to some of the stuff we're working on with metallic minerals and group 10 metals, but we grew that into what is now 40 million ounces of gold and in the reserve, which is your most high confidence part. And the blue sky kind of inferred number is now upwards of 100 million ounces. So it's now one of the biggest undeveloped gold deposits in the world. And they've just gotten their permits recently. So it's going to be exciting to go up there here someday and actually see what it looks like when they start to get in there and start, building it and turning it into a mine. Later in my career for that same company, because it was an international company, I got a chance to go work in Australia and Papua New Guinea, West Africa, South Africa, China, Russia. So it was really an opportunity in geology. It's important to be able to make comparisons. I saw this type of deposit in this location and this kind of deposit in this location, and just start to be able to draw similarities and differences so that, we can take this limited amount of information that we have on any project and start to make some observations. We can say, oh, this looks a lot like, this has got the kind of intensity of pattern, the scale, the layers of information that we're looking for to try to find something that's got real, size to it. In 1998, myself and two other geologists decided that we kind of had enough working for a big mining company. It was a kind of a tough period in the market. All the big companies were downsizing. And as we talk about the cycle, one of the things you learn is that the big mining companies, because they're so driven by their investors who are demanding that they, during the really go-go times, they're out there, oh, go buy growth, go take that company out, go get bigger. And then when the metal cycles, turn around, then all of a sudden people are like, wait a second, you're not making as much money on each ounce of gold you're making, so cut your costs, fire those geologists. We don't need those guys around. So our business is very cyclical. So anyways, as they were starting to cut back on exploration, myself and two other really fantastic geologists said, well, let's go out and basically start our own company. And so we focused in an area we knew well, which was Alaska, and we picked up some ground. And it was one of these times, very similar to today, really, where it was a very difficult time to raise money to do exploration, but it was a great time to be picking up properties because you were in the bottom part of the cycle. And so that opportunity to go out and do that allowed us to build a company called Nova Gold, and we got started with a couple of projects in Alaska, and with some great success, and there's always a bit of good luck that goes along with this. We grew that company from about a $10 million initial market cap. So market cap is number of shares outstanding times share price. So in the lean days, it was about a $10 million market cap, just a real startup. And then we managed to grow that over a period of about 10 years to a $2 billion company. And then at that point, we no longer had 3 exploration geologists that were running things. We then had, 175 employees and multiple projects. And so at that point, what I recognized was, wow, I really enjoy the hands-on part, the startup phase. And so went on to start a couple of other companies along the way. I think it's probably helpful, Brandon, to kind of, I know that you guys have been looking at cannabis and crypto and stuff, but another kind of might not seem like it, but another example of kind of how mining works is it's actually quite similar to pharmaceutical biotech in the sense that you've got these big producers of a product. In pharmaceutical world, it's drugs, and in mining, it's copper and gold and nickel and these other metals. And so what we see is the big companies with their big balance sheets, they're very good at going in and engineering and building a mine and taking it forward and running that mine and dealing with all the operational challenges that come with that because they've got a great big balance sheet they can borrow against, and the market will give them value for these assets, much higher
Yeah.
level of value than what you see in the small companies. The R&D, if you will, in mining, the equivalent to a biotech, are these junior exploration companies, and they tend to be led by people who've been in the business for a long time. They've learned the ropes. They understand what the big companies are looking for. And similar to biotech, we go through kind of a phase one, phase two, phase three program of engineering. So first there's the discovery of a deposit,
Yeah.
then there's the advancement to the first engineering stage and resources, and then what we call pre-feasibility and feasibility, that third and final phase where potentially a bank would loan you money to go out and build your mine. And what we tend to see in our industry is that the big companies will be out building their mines and running their mines and generating all this cash flow for their investors, and that the juniors are attracting a more speculative investor. They're attracting an investor who says, I like the idea of taking something that's really just green fields. It's just really moose pasture or wherever you are. It has real no value. The mineral rights are acquired early on. They're assembled. Those give you the rights. You don't own the land, but you have the rights to develop the minerals, and that has tangible value. If we apply ourselves and we go in and we identify the targets, we drill these targets, and if we have success at the drill bit, so that we start returning numbers that look economic in terms of how wide they are and how much metal concentration there is in those, that can create a tremendous amount of value. Like Nova Gold, you can go from
Absolutely.
a $10
You
million
see it every
market
time.
cap to $1 billion plus.
Yeah. And that's
So
fantastic to go from that, from 10 million up into almost, like you were saying, $2 billion. A lot of people in our area are in the cannabis sector, and they love seeing these speculative plays. I mean, I think every single cannabis play is still a very speculative play. So one of the things that caught my interest is the similarities between exploration and cannabis, in the sense that you're looking for a management team, you're looking for the next big thing. It takes one drill, as you were saying earlier in a talk we've had before. One drill can change the fortune of that company if they hit the right spot, and it's just there's a thrill behind it. It's what's really interested me over the last little while.
yeah, it's kind of exciting because it's almost like you're a participant in this growing process, and you're out there kind of, especially if you follow the companies. We, as mining companies or exploration companies, we put out a lot of information. So what's the geology and how many holes are they planning to drill and what kind of anomalies do they have in terms of what are the things that they're using. And there's what you'll see as you start to study and track some of these companies is you'll see that there's a commonality between many of these. It might be a different metal. It might be in a different region, but in a lot of these, you're going to see it's about, well, what's the geology and what are the different ways that they're targeting. And so we use techniques like geochemistry, which is where we actually sample the soils or the rocks, and we go out and we send those, we collect that material, we note with our GPS where exactly it was collected, and then those are described and they're sent off to a lab, and they come back with the main metals that you're interested in, and then about 40 other metals. So we get all this information on these samples, and that allows us to then start to put that into three dimensionals. First, just what's the lay of that information on a map, and then we can go in and we can use other tools to help us to start to map the geology and understand it. We can use things like the magnetic response. So different rocks will have a different magnetic response. We can use that to help us map, especially in areas where you've got a lot of vegetation cover and you can't see the rocks before you drill them. That's a really useful tool for us. And the other things, there's other electrical techniques and things. Unfortunately, there's no Star Trek device that we can wave and find
Wouldn't that
the
make it a
gold
lot
or the
easier?
copper. Someday, maybe. But for right now, what we do is we start really with the basics of, I've got a map, it describes my property, it shows all the topography, and I can start to collect samples, whether those be soils, which are weathered bedrock. So if I have metal in the soils, there's a very good chance I have metal in the bedrock below. I can start to put those together, and if they form coherent patterns, if I can see areas where we've got, let's say we're exploring for silver, and we've got areas of extensive silver mineralization that holds together line after line after line, that tells me, hey, we've got the beginnings here of something, at least in 2 dimensions on the map, that looks very interesting. And then
Sort of to
the
narrow
second
it
step,
down where we want to go.
narrowing it down where you want to go. Where are the best, where are the most elevated levels in your either soil samples or your rock samples? And then we can go back in and we can start to drill. And that's usually the way it works, is there's a progression with your surface sampling, your geophysics. So this is the, whether it be the magnetics or the electrical response, developing patterns, overlaying those patterns with the geochemical samples, and starting to say, this area over here is really looking interesting because the metal values are so high, and it's got a configuration that shows us it's got potential for scale. Because the thing is,
Exactly.
we can go out and you can find occasionally just sporadic high metal values. Sometimes there's an isolated metal vein somewhere that will have a number in it, but that doesn't mean necessarily that's going to turn into something big enough to be potentially economic and create hundreds of millions or even
And on that
billions of
point of
dollars.
being economic as well, and a part that you had spoken to us, and one of the major topics that I'd love to go through for our different members is you can even have the best drills. You can have a fantastic results. You can have all these different things. They're saying this is going to be amazing, but if you're in the wrong part of the cycle, it almost doesn't mean anything. You were saying that there are certain cycles, and for anybody who was on here before, we gave the metallic minerals PDF. It's their investor
Okay.
presentation, and we also
Yep.
had the Group 10 metals as well. But on the metallic minerals investor presentation, on pages 4 and 5, you've got these graphs, and these graphs are basically showing that there's an index between 500 and 4,000, and it's showing that in peak bull seasons, you're up at the top, and that's at the top of the cycle. That's when everyone is going crazy, and these stocks can be flying. But then you also have a contraction. I believe you were saying something about between was it 2011 and 2016 was a very long bear market. Would you be able to go into a little bit more about the cycle and whereabouts we are right now, which is kind of an indication that starting to look at these companies that do have these proper samplings, they've got these pretty much these X's on the map to start going after.
Yep.
But why it's interesting now because of where we're at that in this cycle that you were explaining.
Yeah, so we were just talking about, what are some of the tools that you use to find an ore body, and that's critical. I mean, clearly it doesn't matter where you are in the cycle if you don't have something that's going to be interesting to the market, then you're going to be trading on what the management perceives you might find, and that's hard to put tangible value around. But yeah, to your point, even if you have something really interesting, something that looks like it's got significant potential economics that can be put around it, if you're not conscious as an investor of where we are in these metal price cycles, then it can make it very difficult to make that into a positive investment where you came in early enough to see the price appreciate as that company undertook the various stages of work and move on. And maybe it's worth just kind of setting the stage for what are these cycles about. I mean, we all have kind of heard people talk from time to time about the economic cycle, and you've got the stock market, and we have these bull market runs and bear market runs, and that we go through cycles. And there's economic cycles that are being driven by individual countries like the US and China, where based on if the economy is doing really well, people are buying products, and at the end of the day, almost everything, unless it's grown, so woods and fiber and things like that, it's coming out of a mine somewhere. So
Yeah.
we've got consumers that are buying things, they're consuming products, and if we look at the metals specifically, whether it be copper or silver or gold, we tend to see a pretty regular growth pattern that's being driven by industrialization and growing population. And so most metals are going up 2, 3, 4% a year. Sometimes it drops back. It can even, be that it's hardly any growth, and sometimes it can surge. You can see 4, 5, 6% increase over the previous year's demand. And so, big picture, as economies advance, if we look at the history of the U.S., We went from fairly low levels of consumption per capita, so per individual consumer, of metals, and that has accelerated and kind of leveled off in an economy like the US, where I think on a copper basis, the number I saw was each person consumes an average of 40 pounds of copper per year. So that's
Really?
between
I
the
actually didn't know
cars you
that.
buy, the phones you buy, the
Yeah.
fact that stuff infrastructure is being put in around you, a new skyscraper goes up, there's copper being consumed. So they divide all that copper that's consumed, divided by the number of people, and they can come up with these numbers
Yeah.
that they can divide by the population of that country, and you can see some really interesting patterns. As countries mature, as their economies mature and industrialize, they consume more and more metal per person. And so when we look at the US, it's fairly stable. We've been consuming, slightly growing because of technologies, but we're basically consuming this relatively high. If you are an export economy like Korea, which makes all this stuff, but most of it gets shipped elsewhere, they're consuming like 70 pounds per capita. So it's much higher level, but they're not consuming all that internally. Look at China. It's like 4 pounds per capita.
Yeah.
It's a fraction of what we're consuming right now. So in terms of the long term, there's no question that as China, India, Africa, even Latin America, as they start to come up to the same level of living standard that we have in
More
North
precious
America,
metals we're consuming.
metal consumption, as our cars start adding computer screens to them, as we start to look at EV, electric vehicles, and other technologies, everything is getting more and more of these important metals. And of course, the precious metals are an important part of that to some degree or other, but they're also an important part of that kind of fundamental store of value concept, the idea that they have intrinsic value because of their scarcity. So
And where are we right
long
now
term,
in that cycle? If you were to say, are we in a bear market? Are we in a bull market? Are we coming out of one? What reason do people have to start saying, okay, you know what, this might be a good time to buy. This might be a
yeah.
good time to start looking into certain companies.
Well, so we were setting kind of that long term, where are these things going? There's no question that as a backdrop, so it's maybe even the guiding direction, consumption of metals is going up, and it's more or less going up over time, and it almost appears to be accelerating. So that sets a good foundation fundamentally to say, well, why should I even look at mining anyways? It's here, it's growing, the demand is growing long term. But when we look in detail, and this is to your point, where are we in the cycle right now? What we see is during periods of higher metal prices, more money gets spent on exploration, both by the major mining companies and by the smaller exploration startup ventures like ourselves. And so what tends to happen is new discoveries are made, new deposits are found and developed, and that production comes to market. And so even though you've got this background of kind of almost continually growing metal, what you see is at certain parts of the cycle, mines start producing more metal than the demand. And so as that oversupply on a shorter term basis starts to hit the market, it starts to suppress the price of those metals. And so what happens is we get into these periods where we have metal price cycle highs, and then basically oversupply reaches the market, and then these roll over and metal production will perhaps even come off, but basically until demand catches up with that supply, we'll see it roll into a bear market or a negative market where prices fall, and investment in particularly the more speculative companies like ours, the venture startup companies, drops off as well. So if we look, just kind of stepping back for a second and say, well, how significant are these cycles? They're very significant in mining. They're probably so important that if you don't understand where your timing is in the cycle, it could be the difference between a 10-for-1 gain or a 10-for-1 contraction. In other words, a 90% loss. And that's huge. So it's critical to understand where you are.
You want the other one.
You want to be in the, unless you're also going short on the market, and that's challenging to know exactly where you are. You want to be riding the cycle up. So let's throw some benchmarks. So the last cycle peaked in 2011, 2012, depending on what metal you were looking at. And the top of that cycle basically saw gold at $1,900 an ounce, silver at $50 an ounce, platinum at over $2,000 an ounce, $2,500 an ounce. Where did those metals go by the time they hit their lows in 2000 and 2000, late 2015? Silver had dropped all the way to $14. So from
Wow.
50
Fraction.
to 14, gold had dropped from $1,900 down to 1,000, so almost cut in half.
Yeah.
And you know, if we look at platinum, it had gone from $2,500 an ounce to it's right now under 1,000. So that's the kind of and that's just metal. So if you held a bar, that's how much value is lost. If you held a startup venture company, that's where you saw many of those explorers, even with high quality assets, went from, let's say, $10 a share perhaps to under $1, and perhaps even lower in this cycle. When you look at the patterns, you know, it looks like we've been forming a cycle bottom here for the last couple of years. We probably put in that low at $1,000 an ounce gold and $14 an ounce silver in the end of 2015. We had a big kind of run for about 6 months, which was an initial kind of relief rally off of an extreme low, and the sector has been consolidating since that point. So we're about 2 years into what would typically be probably a 4 to 6 year cycle, sometimes as long as 10. But this is a good time to be looking at mining. The valuations, whether you're looking at a producing company or an explorer, have been radically compressed. So the good thing is we can say,
lows across the board.
I like where I am in the space. Values are near their lows. I'm not buying at a top. And now if I can choose good quality companies, I can be patient. What's my timeline as an investor? I'm looking out 2 to 3 years, and perhaps 3 to 10 years, but at least 2 to 3 years. And I'm expecting that with a rising metal price, that these companies, if I've chosen good quality companies, as they do their work, and as metal prices rise, I get a kicker. I get the growth from the work of the company, that's going to increase value, and I get the growth in the underlying, you know, metal that they're exploring in, which is going to increase valuations of the equities.
Yeah, and you hit it on the nail on the head there, where, you know, as an investor, you always want to find that right timing. Again, we'll go back to cannabis just for a moment, just because a lot of our investors have been through this for the last couple of years. Many of us started years ago, and that was just like if you were just coming out of the bear market in 2014, 2015 for mining, where these evaluations were very, very low. I know for myself, I got into some of the cannabis plays where, you know, they won't ever go down that low again. I don't believe, at least. But you want to be looking for situations where you can get ahead of the curve, because for all of those who got in last November, I'm not sure how familiar you are with the cannabis cycle and what's been happening, but a lot of people went in and the market crashed. I mean, it contracted. The whole North American market contracted. There was tariff wars. I can go on forever for a bunch of reasons why it happened. But if you'd gotten in 2 years ago, like some of my investments, even though they were tracked at 50%, 60%, I was still up 100, 200%, because I picked the right time to get in. And from speaking with you and speaking with other people in the mining sector, that a lot of them are starting to believe that now is that time to start looking for these companies, because now is that time where we've been coming out of this bear market for such a long time, and there's a lot of opportunity. The risk of it crashing by 50% or soaring by 200 or 300%, you know, that there's a good trade-off right now between the two. There's a good trade-off where the risk reward of going into certain plays for, like you said, is it 1 year, 2 years? This isn't a get rich quick scheme. It's not going to be 1 month it's going to go up by 200%, or not usually, at least. But it is a good time to start looking at things. And that's one of the more interesting things that I wanted to bring onto this Facebook Live that we're talking about now with you, because you can see it. I mean, Chris had put a post into the comments, and it's also, I believe, page 4 of the Metallic Minerals PDF as well, where it's showing an index of where it was, where, you know, it's from, like I said earlier, it's from 500 to about 4,000 or so, and it usually peaks around that 2,000, 3,000 point. We're not even close to that yet. Not even close. No. And I think that's what also gives a lot of reason to be in it.
Exactly. The last cycle took it over. Typically these things end, as you said, 2,500 to 4,000. We're using the venture index in that particular chart, the CDNX, to be a benchmark because it's really weighted heavily towards resource stocks. But
Yeah.
just showing you that cycle of where we were, it's under 1,000 right now. I think it's somewhere around 750 or something. And yet typical cycle, probably 2, 3, 4,000 by the time it runs. And if it's one of the really strong cycles, this could be higher. And some people argue for a bit of a symmetry. If you've got a particularly bad bear market, which we just came through, that you have a
Mhm.
chance to have a higher rebound as you go back to the other side. I'm sure that that's to some degree dependent on what's going on in the backdrop in terms of the cycle.
Yeah.
But absolutely, I think in terms of where we're at, downside risk. Okay, what is our downside risk? Well, we could retest those lows. We could go to $1,000 gold again,
Yeah.
$14 silver. The reason that there's not a lot of risk to go lower than that is that starts to get into the place where that's producer price. And so if the prices go, they could go below that. But the reality is, if that's the case, then many, many, many mines have to shut down, and that's going to contract supply. So could it go lower? It could, but then you're taking away the whole supply side of the equation. And one of the things that is worth kind of mentioning on that kind of supply demand dynamic is because the last cycle was so negative. Uh, the junior mining companies, the explorers, were starved of capital. In fact, recently we were at a conference where some of the guys that track these statistics in the mining industry were saying that the current level of investment in juniors is at one of the lowest levels on record. At only 20%
Wow.
of all exploration dollars are going into the junior explorers.
Yeah.
80% is going into the mining companies, but they're not going out and looking for new deposits. They're exploring on the edges of their existing deposits to replace the production that they're already mining and keep that mining operation going. And so that's not finding new ore bodies that the market is going to need to really be able to meet future supply. So that downside is probably pretty limited. Um, Upside,
Okay.
as you
Upside.
said, we've got potentially 3x, 5x, even 10x potential as a backdrop for the sector. So that's saying go out and buy the GDXJ or
Yeah.
GDX and just
Mhm.
ride it.
Yeah.
But in select names, you may have an opportunity if that company has got a really top-notch management that's got a lot of expertise in what they're doing, and they're focused and they've got the funding they need to be able to advance. We have examples. Nova Gold would be one. There are others where you can see examples of 50x, 100x type gains due to a combination, the cycle at your back and the success at the drill bit, basically drilling, growing resources that the market wants to see and being able to deliver that growth and then to advance it into the more advanced stages, which as you take these things from initial discovery into engineering, well, into resources, then into each stage of engineering, the market will give a higher and higher valuation on those resources. And that's why you can take something that can start out at tens of millions and move into the hundreds of millions or even billions of dollars of value.
It's the invisible hand working. It's the invisible hand. Anyone who studies economics, supply and demand. When there's an oversupply, obviously your prices start to go down. When there's a scarcity, obviously you can start charging more. And not to go
Yep.
on too long of a rant, but copper has been being called on for years now. The last 2 or 3 years, the red flags have been going because these large pits are getting deeper and deeper and we're not I believe the stat said there's no new open mines coming until like 2019 or something like that. This was a couple of years I was reading into this, but it's
Yep.
going to show that with all of these electric batteries going into houses, going into cars, going to all these different things, what do you think they need? They need your
Yep.
copper, your cobalt, your lithium, and they may change how much of each product or how much of each precious metal you use in a battery. Who knows? But you still need
Yep.
those precious metals. And we were coming to a point now where it's like you said. I mean, another graph that Chris put up here was the CDNX, where it's showing the different cycles of going up.
Yep.
It's reaching its peak, and then it starts contracting, finds its trough, and then takes that bounce and keeps going after that. Well, we just had that bounce about 2016. both in the
Yep.
CDNX, but also in the other index we were looking at earlier when we were showing that we were only around like 800 on the index, and we usually peaked about 25 or 3,000. So I know that both of us can speak for forever, and I appreciate that about you. That's why I like people who can really talk about something they're passionate about. But we will cut this one short just because we have a couple things. Specifically, Pat was on there, and Pat Martin, you asked what are the three big things you look in a company. Well, sure enough, that's going to be the talk of our next Facebook Live because we've already spoken about that. It's very interesting to look into those three. And you were even saying that given a position of a company within whether it's just started or whether it's begun
Yep.
drilling and those different aspects, how much there is in the ground, how much you think there is compared to drill results and the price of that metal, you can almost
Yep.
pinpoint whether a company is oversold or undersold, which I think is fascinating. I want to get this on camera. I want to keep talking to you about it, but we are going to save that for another day because I have a strong feeling you and I could go on for a very, very long time going on to these, but this is just a nice introduction bringing you in. I'm very excited for more of these to come in the future as well. And I appreciate the time that you're taking with us. This is, it's been a long day for you, and here you are for our Facebook group and for our community, just going through and helping people understand what they're doing. There's much more of this to come, and I can't thank you enough for everything that you've done tonight, and we're going to continue to do as well.
Sounds good. Yeah, I think we've got some interesting topics that we can go into.
Just a few. Just a few.
So let's not give away everything on the first go around. But it's been really nice to join you on this, and hopefully
No,
we've kind of planted
absolutely.
some seeds with people and some thought, and maybe there'll be some other questions that come up. But I think the main takeaway for me would be um,
Yeah.
how important it is to know where you are in the cycle. And the good news is we don't have to wait 2 or 3 years. I think we're at these
No,
attractive
we very well may
valuations
be there
without a
right
lot of
now.
downside. Yeah, and so that's great. So then the second pieces that we'll talk about more in the future, I think, is what are those elements we should be looking for? What are the criteria, timeline, and what are those stages, and what are those relative valuations? There's
Yeah.
kind of some things we can talk about too, are the fact that especially at the early stages in a lot of industries, there's not a lot of visibility. It's hard to find out information about these companies. So you can get some real
It's
disconnects in
very hard.
value. Sometimes things
Very
are
hard.
trading ridiculously cheap, and sometimes they can get ridiculously expensive for the stage
Yeah.
they're at. And there are some tools though that we can bring in to say, is how do we value this, and what is an assessment? So those will be some fun things that we can talk about in the future.
I'm very excited because you hit you. That's exactly where I felt just a few months ago when looking at these different companies. You ask yourself, how do I know if it's overvalued? How do I know if it's a good company? And it sounds like in the very near future, we're going to get a few more of these talks, and we're going to explain just how to find that out. So stay tuned for more. And again, thank you for taking your time, and I appreciate it. This is the first, but it won't be the last.
Oh, great. Well, thanks for having me on. Glad we got the technology worked out. So
Yeah,
it's been a
you came
pleasure.
close there.
Okay, take care.
Okay, take care. You have a good night now, and thank you everyone
Yeah.
for joining us.